Gold and silver prices are both getting hammered hard today. They continue to move lower, and the question is, why are they going down and where could they go from here? Let's get into it. Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. Thank you so much for watching. I do sincerely appreciate it. Here we are looking at the 1 week chart for silver. Now silver's down big today, almost 3%, 70-cent drop at the moment. Now if we back up to December 1st, silver was well over $25 an ounce. It's now down over $2 in just 1 week. So silver keeps on getting hammered. Gold is getting hammered as well. The high for gold was $2,072. This is when the market closed on Friday, December 1st. And if you remember, on December 3rd, when markets opened, gold went up to over $2,100, but by the time the markets closed on December 4th, gold had fallen to $2,034. It is moving even lower today, down $27 on the day. We might go below $2,000 for gold. So both precious metals are getting hammered hard, and the big question is, why? Why are they moving lower right now? I think this article sums it up nicely. The headline reads, "Price pressure on gold after Goldilocks U.S. jobs data." So the U.S. economic report came out today, and the data in that report is suggesting that the Fed can keep rates higher for longer. Check this out. The just released U.S. employment situation report for November showed the key non-farm payrolls number up 199,000, which is just above market expectations for a rise of 190,000. However, the overall U.S. unemployment rate fell to 3.7% in November from 3.9% in October. So not only more jobs, but also unemployment rate falling. I mean, these things obviously go hand in hand due to the overall internals of today's jobs data. The report appears to fall very mildly into the camp of the U.S. monetary policy hawks who want the Federal Reserve to continue its interest rate increasing cycle. However, others are calling today's jobs data a Goldilocks report, which is not too hot and not too cold for the general marketplace. Right, not too hot, not too cold, just right. You remember the Goldilocks story. But either way, with this data coming out, it's essentially telling the Fed, look, you don't have to start cutting rates so soon because unemployment is not that bad. Everything's fine. We're not slipping into a recession. You can keep rates higher for longer. Now, why does that have such a big impact on precious metals? Let me break it down for you. I like to show this FedWatch tool when I talk about gold price and silver price because this is one of the biggest things that affects it, whether it's going to go up or down. It's a huge predictor on where we think gold and silver will go in the future because these percentages right here have a direct impact on inflation and the strength of the dollar. Now, I'm going to break that down even deeper for you, but right now it's saying the target rate probabilities for December 13th, no rate hike, 98.4%, a slight chance of a rate hike at the next meeting, which is just coming up in a few days. At the January meeting, they're saying probably rates are going to stay the same. Maybe they'll go up, maybe they'll go down, but most likely they're going to stay right where they are. And in March, they're now saying it's most likely that rates are going to stay the same. There still is a chance that they will go down in March, but for the most part, they think they're going to be parked. So why does this affect the dollar? Why does it even matter if rates go up or down? How is that going to make the dollar stronger or weaker? I realize I haven't really broken this down before in a video, so let's get into it right now. So if rates stay right where they are, or if they go up, this is not really incentivizing people or businesses to take out more loans. Now, why does that matter? Well, when you take out more loans, this creates money out of thin air. This literally expands the currency supply. So if you create more dollars by taking out a loan, and this makes more dollars exist, that creates inflation. And when we have inflation, that weakens the dollar. So by taking out a new home loan, you are actually creating more US dollars that did not exist before. So if rates go down, this is incentivizing individuals and businesses to take out more loans. Now, I know a lot of people are looking at the housing market. They're looking at buying houses. Maybe you're a first-time home buyer. Maybe you own a home and you want to move or upgrade to a bigger home, but you don't want to right now because rates are so high. Your mortgage is fairly moderate, maybe high, but if you take out a new loan, the rate you get is going to be a lot worse than the rate you got 5 years ago or 3 years ago. So a lot of people are incentivized to just stay in their current home, don't take out a new loan, or if you're renting an apartment, don't buy a new home because rates are so high. Now, they're not really that high historically. I mean, like 5.5% is not outrageous, but it's definitely a lot higher than we've gotten used to. So if they keep rates where they are, this is basically telling people and businesses, do not take out more loans. Do not create more currency because it's going to make inflation worse. I mean, that's why they raised rates to begin with. So the fact that rates are probably going to stay the same in March is just postponing the rate cuts. I mean, I guess if we go out to May, we'll be able to see they are expecting a rate cut in May. It was March just last week when we looked at this chart. But that's basically why these percentages matter, because once they start cutting rates, this is, again, incentivizing individuals and businesses to take out loans because loans are getting cheaper, and this is going to create more currency, expand the money supply, create inflation, weaken the dollar, and then push precious metals up. So it's like this chain of events that would take place if rates go down. But the bottom line is, once they go down, or once the market thinks they're going to start going down, we usually see gold and silver prices go up. Now, obviously, that's not the case today because the data that was released was saying, look, you can keep rates higher for longer because it's not going to crumble the economy. We're not going to slip into some crazy recession if we don't lower rates immediately. So that is literally why we're seeing gold price fall and silver price fall right now. It's so interesting that when new data is released, when Jerome Powell speaks, whenever the Fed does anything, it has a big impact on gold and silver prices because, look, the dollar is the main thing pushing silver up or down right now. Same with gold. But let's look at silver, for example. Let's go to like 3 months and look at the US dollar. So the dollar is in blue, and essentially whenever the dollar is going up, we see silver going down, and whenever the dollar is going down, we see silver go up. So if the dollar is going up right now, which I definitely expect it to be, then we see precious metals move lower. And if we take a look at the US dollar index, we can see it is in fact up big today, again up over 104. So dollar up, metals down. That's the story. Now, just because the dollar is the main thing affecting precious metals prices right now does not mean it will always be the driving force. If there is a big geopolitical issue that pops up, a worsening war, another war, etc., this could be the driving factor which pushes gold and silver up or down, but at the moment that is not the case. So where are they going to go from here? Well, I feel like at the next meeting on December 13th, Jerome Powell is probably going to say more of the same, and we're going to have to wait for more data to come out to push metals up or down. But really the main thing that's going to affect them at this point is the dollar and rates. Where are rates going? If they go lower, I expect to see metals move higher. So I will say, if you're wanting to accumulate more silver, if you're wanting to accumulate more gold, now is a great chance to buy whenever they're moving down. I like to buy the dips. I love to see all the red. When I see red, that means buy, because ultimately I do think silver and gold can and will go much, much higher than they are right now. So let me know down below in the comment section. Are you buying today? What are you buying? Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.